Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, May 29th, end of the month here, so we'll be heading into June next week. Hey, I hope you guys have great plans for the upcoming weekend. Sorry about yesterday, I was not feeling so well, a little under the weather. Had one of those 24-hour bugs, feeling a little bit better today. We do got some important data today, and we got the real important one here, GDP for the first quarter. This is the second revision, so the final revision will come out here in June, but not pretty ugly. Actually, this is even more ugly than what it looks like. GDP came in at 0.2%. The first one last month, the initial was supposed to be negative 0.1, and actually this is not a positive number. This must have been a negative 0.7%. So my apologies, I made an error on there. It's actually negative 0.7. So technically we would be recession if that comes to fruition. That would be a recession as it's contracted. But we'll have to kind of wait and see. It could be due to weather. Part of it would be weather, and of course the situation on the West Coast ports, with the labor disputes that were going on with the contracts. Chicago PMI. This is a manufacturing Chicago region. Also a big drop. We had actually contraction there. So anything below 50 is contraction. As you can see, back in April it was 52.3, and May dropped all the way down to 46.2. So it contracted in that area. And in consumer sentiment, we had the preliminary numbers, so we get one like about halfway through the month, which was at 88.6, and the final revision came to at 90.7, but it was lower than where it was before. I think it was around 95, the final revision from previously. So a pretty big drop right there, and this is the lowest we've had in like about 6 months on consumer sentiment. So overall, not a good day for data to be rolled out here. So of course the stock market's down, is taking into it, but they are getting a little confused these days because before they were saying bad news is good news because there were concerns about the rate hikes. Now they're kind of like, okay, should bad news be bad news and good news be good news? Or so they're kind of a little bit of flux on the market, but today they're actually down for it. And as a result, the bond market's gone up. So hopefully we'll have to see if this continues, maybe next week. If this continues, so maybe we broke out that little pattern where we kept touching and then bouncing back down. So maybe we broke above so we can get better rates in the near term here. Okay, so interest rates are better today than where we left off yesterday, and looks like we could potentially see some improvement. We'll have to kind of wait and see what next week brings, but so far it's helping us out in the bond market. All right, have a wonderful weekend. Thanks again for watching. We'll see you guys on Monday. Take care.